Welcome back to another roundtable. My name is Adam. I have Rusmin.
Hello.
And Victor.
Hi everyone.
Thank you for joining us today. And we want to talk about SATS. All right, so SATS is a Singaporean company. Before the pandemic, it was a very steady dividend payer, very, very consistent dividend. And then the pandemic basically changed everything for the company. So SATS is an in-flight caterer, ground handler, and now it's also a cargo handler. Following the acquisition of WFS, we'll talk a bit about that. So we want to have a look at SATS and see whether there's a turnaround that could be going on right now, whether it's going to resume its dividends. But before we jump into its most recent results and all that, maybe just a very quick recap for those who don't already know. What the WFS acquisition was all about for SATS.
So basically, I think SATS is dominating on the ground handling business. Then they do have some cargo business. And they realized that when the pandemic happened, right, their ground handling business really make a lot of losses because there's no flight coming in, there's very few flights. And they realized that the cargo business is still making money at that point of time. So they want to sort of like pandemic proof their business. So they decided to look around and they found WFS, where they are the top players in terms of the cargo handling, in terms of their business. So they want to acquire them and become the largest cargo handling player around the world.
All right.
And WFS, right, is more focused in the America and Europe region, while they are more mainly in the Asia region. So that makes them a global player after the acquisition.
Even for during the pandemic, I think their in-flight services, catering services also were barely affected. That's the reason why I think WFS actually came in, because they want to become more resilient in the event when next time there's another pandemic hits the world, right? At least their cargo division, which now account I think at least 50% of their revenue, based on the latest 9 months FY 2024, which their financial year end in March, right? Every year, right? So now that actually constitute about half of the business, right? So SATS is more on cargo business now than they used to be in the past, where they mainly do in-flight catering and ground handling services.
All right. So I guess SATS is, like you said, more resilient now, and the acquisition kind of made sense on paper, right? It was a very synergistic acquisition. Like you said, it could basically diversify the businesses and everything like that. But it was also they had to pay quite a pretty dime for the acquisition as well. So, but you take a look at the 9-month results, 9-month FY24 results, which is the latest one that just came out. It looks pretty good. I mean, if you look at the numbers, the revenue compared to the previous FY, and these are just 9 months for this year, the revenue has more than doubled. And is now profitable as well. So is a turnaround on its way? What do you think about the results?
I think if you look in terms of the flight handle, the meal serve, and the passenger handle and cargo, all this, you can see it's significant improvement because it consolidates the WFS results in it. But I think we still need to see the breakdown in terms of the SATS and the WFS. Right. So if you were to look at their recent quarter slides in page 12, you can see over there the amount, like in terms of the total revenue, the cargo, the ground, you see very significant improvement. But let us look below at the region part, where I actually highlighted in and there's a red arrow over there pointing it. Because they split in regions: Singapore, Asia, ex-Singapore, EMEA, and America. So SATS, right, is mainly Singapore and Asia. So you can see that actually that segment, right, it still grow significantly because it's on the recovery. So if you average out, you add them both compared to the previous 9 months, right, they only up overall revenue about 31%. So that was the SATS business. The WFS business improved significantly because they added in that business.
So it wasn't recognized in FY23.
Yes, correct.
So now FY24 we have the
WFS business because there's some cargo business or some EMEA America business for SATS also.
So it's not an apple-to-apple comparison. So because a year ago cargo business was small for SATS, now it becomes like a large chunk of it. So it looks like there's a big jump in terms of revenue, but I think it's not the case. If you I actually strip out the SATS component only, and I compare on the revenue based on 9-month basis. Actually, there was an improvement of about 28%.
Okay.
In terms of the top line growth.
Yep.
Yeah, but you look at the profit after tax on the core basis, just the SATS alone, there was also improvement of about 34%. But then this on an annualized basis, I think you're looking at about maybe 70 or 80 million in terms of our profit just solely from SATS. But if you look at the pre-pandemic level, SATS was making about, I think,
on average, I think 240 million.
240 million,
and
and now
profit? In net profit?
Net profit, Now, even with the acquisition of WFS, they are not even making that level. It's just a fraction of it. So the recovery is actually a lot slower than what actually people expect. And in fact, SIA was actually recovering very well. Because the in terms of operational statistics, you get to see that a lot of their stuff, like the number of flights handled, is almost like 86% of the pre-pandemic level. But I think the large recovery is actually cargo, which is almost still the same, right? 99%. And then the meals itself, I think you are almost like 97% for compared to the pre-pandemic level, right? But that's just in the month of December. But I think there's a lot of recovery happening, but it's just that the profit is not showing up.
Okay. So I think if you look at SATS business, right, it does recover. It usually recover. You compare quarter, compare last year, it's really recovering. It's just that just now, Rusmi, I just give out the rough number of the annualized figure. I think it's around 33% of the pre-COVID profits of 240 million. Okay. And of course, they still got those like one-off integration of this, which I did not add in. So that may be slightly higher. But what shocked me was because I remember when we was looking at the WFS acquisition, when they show the EBITDA numbers are very good, they generate this. Okay, the good thing is the WFS EBITDA did improve. Okay, because during the acquisition at the point of time in March, right, the profit was about Sing dollar roughly about 337 million. Okay, right now WFS EBITDA is about 407. But what shocks me is because they didn't show the profit. But right now there's a profit showing here on WFS. So the third quarter, for the first quarter of WFS, I actually make about 32.3 million losses in terms of core PATMI, right? Probably. And after that, second quarter is about 5.9. Then the third quarter is about 3.9, which is positive.
Okay.
Right, but you add up the whole year, they're still negative. I don't know what happened, but this is quite shocking to me.
Okay, right? So even after everything, WFS at this point isn't profitable.
Profitable.
It's not profitable.
Well, I mean, it looks great in EBITDA, in terms of EBITDA.
Yes, correct. Yeah.
But in terms of like core PATMI, which is profit after tax and minority interest, it's basically nothing, right?
Yeah.
In a sense.
Yeah. So that's really shocking. Something shocked me. Right? Okay. But the SATS business is really recovering.
Okay.
Right?
So SATS itself, pre-acquisition, the SATS core business, that's still running along nicely. There's a recovery going on in Singapore and Asia.
But if you look at the EBITDA numbers, of course, it's still pretty much aligned with what the numbers they pulled up previously. The EBITDA margin of 17-18% for that business. So I think a large chunk of why the profit not coming in is mainly because of the higher costs, right? Manpower, they got to ramp up ahead of the flight recovery or the travel, right? So that cost actually also put a lot of pressure on them, especially in regards to the inflation. And I think apparently there are agreement with airlines also in terms of foods. It doesn't allow them to raise the prices as fast as the inflation. I don't know how they schedule agree on the contract, but because of that, their cost actually went up. That's why profit isn't coming in. Yeah, so that's one. Interest rate is one of the main reasons, and second, of course, is the higher manpower cost and the raw material cost for them. Yeah, so this is something that I think we are a lot. I think people are really expecting them to recover fast, but it seems like they are very slow on that.
Okay.
Yeah. So I don't think it's like next year will be like full recovery. Right?
Okay.
I think they still need another 2 or 3 years to recover back to the pre-pandemic. This is the first thing. Second is the good news is that if you look at the group cash flow statement over here on the 9-month full year 2024, right, is positive, 247 million. Okay, so that is a good sign.
Yeah, so it's close to pre-pandemic profit. So it's innocent, right?
Correct.
It's 240 million, like you were saying.
Yeah, but the amount should be much higher because right now they got the WFS, right? But now with the WFS, they are sort of like back to their original business. cash flow.
So even though now it's like you're saying, it's a bigger company, it's still producing
the same cash flow,
the same amount of cash flow.
Yes, correct.
But then you have more share because they issued the rights. Remember when they did the acquisition? It was about, I think, 1.1 billion, and then now it's about 1.5 billion in number of outstanding shares. So that if they were to want to bring up the earn before the EPS that they used to be, like the pre-COVID level, they need to make at least 400 million. To pay out the same amount of dividend, which is about close to 19 cents.
So they need to double basically.
Yeah, so it's still some way ahead. But now I think what they have been doing, I think so far they've been paring down the debt, refinancing at a lower rate. Yeah, so there's quite a bit of saving, which I think will be reflected in the fourth quarter of this year. And then subsequently as they continue to refinance at the lower rate, because when they took it on, the financing was about 9%.
That's expensive,
and then now they managed to refinance it, some at 3.5% on the first tranche already of this year, and then they're going to reissue a new one to refinance those more expensive debt that they took on earlier.
I think it's really interesting because I think EBITDA is a metric that Warren Buffett doesn't like.
Yes.
Yeah, he's saying that, look, a lot of companies sometimes use that EBITDA to kind of like show a much nicer number of what's happening. In your opinion, in your experience, do you disregard EBITDAs, or you just kind of like look at this as a number, but I still look at the other like net profit and stuff like that?
I do personally look at EBITDA, but not as often unless, sometimes, like in the case of Alibaba, I look at it because they have amortization, which is, you can still use it. It's just that the depreciation, those asset-heavy businesses, you also need to look at their EBITDA, because depreciation sometimes can form a part of it. But sometimes these are all real cost.
Yeah, depreciation to me is a real cost.
Yeah, it is a real cost.
It's a real cost.
Yeah, but I think what Buffett is referring to is that a lot of EBITDA, when they actually counted in the share-based compensation, which are real cost. Right, but because these are non-cash items, it's all being added. Yeah, so this is something where I think for EBITDA in this case, for SATS, then I need to look at the profit after tax, the core adjusted one.
There's a better metric to measure,
because they use that to calculate their dividend per share in the past.
Because you can't pay dividends out of EBITDA, right?
Correct, you can't.
Yeah.
Yeah. So I think they are still, so that's why the recovery is longer than expected, and the WFS numbers is a bit shocking to me also. Yeah, so I think the numbers now is a big mess for SATS, and so I probably will have to wait for their full year result to be out to see more breakdown item in terms of the interest expense and all that stuff. Now it's a bit a mess here and there, because you're also not comparing on the apple to apple comparison.
So you need a bit more of a track record to see how the whole new business, this new bigger business is doing. But it seems like, overall, the world looks like everyone's traveling. There's more activity going around, so hopefully that will help with the business.
And during the acquisition, I remember that we're talking about the cargo business, right, which the rate was actually at all-time high because of the supply chain issue, and there was in high demand. But post-pandemic, as supply chain normalized, I also want to see the cargo business, once it normalized, what would be their earnings, or EBITDA, whichever number that you call it. So it's a business where I probably will continue to monitor the next couple of years to see things even out, iron out. And anyway, their debt is quite big right now. As of now, I think they owe on a net debt basis is about 2.2 billion. So that will take a while to pay down.
I think I think some near term pressure for the company is basically, I think it's like what you say, the cargo volume, right? If you look at the slides in page 26 of the operating statistic of the third quarter result, right? They shows the cargo volume is sort of like the June and the July, it decrease. Then now it start to stabilize and increase a bit, right? So it seems like a improvement for the cargo tonnage. So the current cargo tonnage together with the SATS, right, is about 7.5 million. I round it up. 7.4 something, but I'll just round it up to 7.5. And if you were to flip back to the WFS slide, right, the cargo tonnage at that point of time when they say they combine, right, is 9 million. So that means there's a drop in terms of the cargo tonnage volume for the WFS and also SATS. So this one thing we need to take note, right? When will you recover? We're not sure. But according to the management, seems like cargo is very resilient.
Okay.
It may go up and down, but it's on the uptrend. So you have to really monitor on that.
Would you feel like air cargo is something like shipping?
Yeah.
I mean, you look at shipping companies, it's a bit cyclical in a sense as well.
Yeah.
And maybe air cargo is like that. What do you think?
I think they expect the cargo volume to continue increase because of e-commerce and all.
Okay.
This, right?
All right. So, at any other near-term concerns, that you think could affect SATS besides cargo numbers and the debt being so high? Anything else?
I think their agreement on the catering services for in-flight debt, whether they can have the pricing power to improve the price over time, that's something need to monitor, which I believe it might happen. It's just that part of the business now becomes like 20-30%.
Okay.
Instead of like they used to be.
So it doesn't move the needle as much now.
It doesn't move the needle that much. Yeah. So actually, without the WFS acquisition, SATS by itself, if you take into account all those post-pandemic recovery, it will be a lot faster. Yeah, because they are showing profit after tax. Right? But WFS doesn't have profit after tax. It's super thin.
Okay.
Yeah. So I'm not sure what's going on there. But it's now it's a lot more complicated than it used to be in the past.
Okay. So would you think SATS, I mean, before the pandemic, it was paying a dividend, like I said, and then they had to cut their dividend because no one was flying during the pandemic. So right now, it's still not paying a dividend, if I understand. So do you think SATS will resume its dividend anytime soon?
I don't think so.
You don't think so?
I mean, if you look at the slide number 11 of the key financial matrix, they put this thing called value creation.
Okay.
And they put numbers on all these value creation. So I assume the numbers reflects their priority.
Okay.
Right. Okay. So the number one is scaling of revenue for sustainable growth. Number two is cost takeout to drive operating leverage. Number three is rationalize the portfolio footprint. And four is cash flow optimization for aggressive debt pay down.
Okay.
Right. And then your dividend.
Okay.
Resume the appropriate dividend payout. So it seems that because their debt is really very high. Okay. So pay down their debt, I think, is really their top priority. And if I'm the management of SATS, the first thing I'll do is also pay down.
So there's a more financially responsible decision to make, right? To pay down first before actually paying.
Yeah. So I don't think in near term the dividend will come back.
Okay.
Right. And if you were to see pre-pandemic, dividend is 19 cents. That worked out to be around 212 million. Where's their profit now? About maybe annualized 70 or a million. So I don't think they are able
they're not capable of doing it.
Capable to even resume to 19 cents. Right.
If I'm the management, I won't do the WFS acquisition.
But you're not.
So it was a wrong time, I feel, because at the time when the cargo was booming, everyone was like, oh, cargo is such a wonderful business. But things would normalize in the post-pandemic world. And it was also the time where their share price was quite depressed, and when they went to issue the rights, and that makes the whole thing more dilutive. And at the time the interest rate was very high. When they announced
good points. Those are really good points.
So I feel that it could have just give it a means to, maybe when the times has recovered back to normal level, they can look out for cargo business to acquire. But of course, by then opportunity may not be there, right? So, what is done is done. I'm not a SATS shareholder, so I don't feel sad. So I'm just monitoring and see whether there's any opportunity of there's a quick catalyst that will turn around SATS. But at this moment, I think the debt is too high. So you're going to take a few years at least for them to pay it down.
And when will the interest rate come down? You never know, right? Because previously, if you were to look at the Fed, they say they're not going to increase interest rate. The next moment they increase like crazy, right? And now they say they're going to cut down, but after that they say that I think the inflation is still high, it's not at the 2% mark, I'm not going to cut. So they keep pushing back, from March to June. People are now expecting May or June they will cut the interest rate, but you never know. They can overnight just change the situation, right? So I think there may be some interest rate pressure on them because the interest rate the interest that they pay does affects the profits also,
because there's so much debt on their books,
they have a lot of debts and all this. So I think when is the best time to really look at SATS is that you have to monitor the debt, right? And see whether they continue to pile out and the debt level is really dropping or not. Because if the debt level is really dropping and it really drops to really like their old time zero debt, right? Then you know that the coming dividend is going to be high, right? And why am I saying that is because we used to invest in this company called Cross Harbour, right?
Okay.
Was
long
found by Rusmin, right? And the characteristic was very similar, right? Toll business in the harbour. You need to cross the harbour to another side of Hong Kong. You need to pay the toll, right? But they got a lot of debt, right? Because they buy the toll, right? So for many years they have been focusing on paring down the debt, right? And eventually when they are close to pay down, Rusmin bought it, and next moment they start to increase the dividend like crazy, and the share price just shot up.
Okay, so it was a series of steps. So it had to the debt had to come down.
Yeah.
And they weren't paying a dividend or a high dividend at a point in time. And then only when they had the cash with the cash to pay the dividend, and then it started paying a dividend, that's when investors started taking notice of it.
Yeah. I think you should take notice of them when the debt levels already start to be low.
Okay,
right?
That's for you because you're savvy.
But not when it's zero, you know.
But what if the general market, did they take notice of Cross Harbour when the debt was coming down, or
I think
only when the dividend came around? Then?
When the dividend is already there, but because the debt level went so low, and the next moment, I think there's a very big spike in the dividend for the next one, right? If I can remember.
The dividend keep on increasing.
Yeah, they suddenly keep increasing the dividend.
Okay.
That's where.
So that's when the price really moved.
Yeah, and that moved within a year.
Okay.
Yeah, within a 70% within a year.
Yeah.
So they just need to watch our channel.
So you guys, I mean, we will be looking at SATS over the next few years. I will assume that's the time horizon you think for this company, because within a few quarters is not going to be enough information.
Yeah, I think at least another 2 years.
2 years.
2 years to see what are their priorities.
Okay, how they manage the debt, how they grow the business.
Will they be really paring down the debts? That's the most important thing, right?
All right. So I mean, this is the thing with investing. Sometimes it's
a waiting game.
It's a waiting game sometimes. You know, I mean, there are always other companies out there. You don't have to like wait for this one stock, right? Basically, but basically at this point, just wait and see what's happening. You don't think the dividend is going to come back anytime soon?
No.
Okay. So I think that's what we think about SATS. I think for a lot of dividend investors in Singapore, SATS was like a huge company for them.
Yeah.
But now it's kind of like no longer. So we just wanted to cover it because I think we covered SATS on this roundtable before. Wanted to give an update because the recent results look really good. At first glance.
Yes, correct.
But then you kind of like peer under the cover and everything. It's a little bit more iffy.
Yeah.
And it doesn't seem like dividends are going to come back anytime soon. So we hope that was a really good update for you if you're looking at SATS and you're considering it. And we'll monitor it ourselves.
Yes,
and then if there's any major significant update, we'll share them with you on the roundtable as well. At that point in time, whenever it might be, could be years from now. Okay, so with that, is there anything else you want to share about SATS? No. Okay, so my name is Adam, Rusmin, Victor.
Thank you
so much for joining us. We hope you like this update about SATS. Any questions about SATS, feel free to ask us in the comment section. You can also email investorrelations@SATS. They'll help you out. And of course, subscribe to our channel and like this video if you think we did a good job. Thank you, and see you around.